Hello and welcome to the Renovation Nation show, brought to you by Renovate, your go-to source for institutional-style property management for small multi-family rentals. I'm your host, Nathan Bush. In each show, I share with you lessons I learned from my real-life real estate experience. We invite industry experts, innovators, and influencers to explore the challenges and opportunities facing small multi-family real estate investors. On this show, we're covering how to identify hot markets to invest in. I created this framework to help you grow in your real estate business. If you want more of these types of resources regularly, you can subscribe to my YouTube channel or head over to www.nathanbushmba.com/subscribe or check out the other resources in the link in the show description. And now to our show. Welcome to the Renovation Nation show. All right, guys, how do you like that new intro? Why do you invest in real estate? Or why do you want to invest in real estate? That's probably a better question. What are your reasons? Put them in the comments. Let's start off right away. What are some of the reasons you want to invest in real estate? For some of you, it's building generational wealth. That might be the reason you're investing in real estate. Maybe it's to break the poverty cycle. Maybe that's some of the reasons I've heard people invest in real estate. How about to pay as little as possible in taxes? Or maybe the reason you're investing in real estate is so that you can get rich quick. Is any of these sound like you? What are the reasons that you're investing in real estate? Is it freedom? Is that the reason you've decided to invest in real estate? On today's show, we're going to talk all about identifying markets for real estate investors. I want you to be able to identify hot markets. Before we can identify these hot markets, though, we first have to consider why we invest in real estate. Now, before I can even get into the content from the show, I got to lay some foundational work for us to go from point A to point B and for you to be able to identify these different markets. So I recently did a presentation to the Platinum Group with Rich Grove's Gateway to Freedom. And if you're at Gateway to Freedom today and you're watching my show, I appreciate it so much. Thank you for being a part of that. If you were a Platinum at Gateway to Freedom, thank you very much for attending my presentation. One of the things we talked about in my presentation, I'm not going to go into the whole thing, that was reserved 100% for those Platinum attendees. But one of the things we talked about at the Gateway to Freedom Platinum experience was this concept of your values determine your value. Your values determine your value. And there's only a couple of different ways to achieve goals. In fact, there's only two different ways. I'm going to talk about those two different ways to achieve your goals. So why do you want to invest in real estate? Keep that in mind. Keep in mind, there's only two ways to get there, and I want to talk about that in just 1 second. But I want to make sure that you guys take a second and head over to YouTube if you haven't done so. Look up Nathan Bush MBA. That's just search on YouTube, Nathan Bush MBA, and make sure you subscribe to the show. All right. Now, let's talk about those two ways. There's only two ways to achieve your goals in real estate. You know what those two ways are? The first way we're going to call the wicked way. The second way we're going to call the moral way. There's only two ways. I want you to imagine a bridge. And on that bridge, you can drive. The bridge is made of wood. And that wood, all the way through its studs and its structure, is all wood. And it's in the water. And it's a narrow bridge. And as you decide that you're going to drive from point A to point B, you have to make a determination. Do you cross this bridge with a messed up potential structure? Or I want you to imagine another bridge. The structure is made of concrete. Everything holding this bridge up has been engineered to perfection. It's got an asphalt overlay on the bridge. It's an engineering marvel with the security and structure that's in the foundation of that bridge. Now, which one of those two bridges do you drive in order to get yourself from point A to point B? See, if you value yourself at all, it's going to be real hard for you to cross that really narrow, rickety bridge made out of wood that was not even designed by engineers. Why? Why would you not cross the rickety bridge? The answer, there's a possibility that bridge could crumble and fall. However, I talked about a gateway to freedom. So many people are building their real estate empire around wickedness and they don't even know it. Let me give you some understandings so that you understand when I'm talking about wickedness, what specifically am I talking about? I'm talking about anything that's not in alignment with the truth. I'm talking about anything that's not caring about another individual. And I'm talking about anything that's not based around generosity. See, all of those reasons I listed earlier that you wanted to invest in real estate. And this isn't just you. I've heard these comments when I give presentations like this all around the real estate investing community. It's not out of line to think, oh, I want to build generational wealth. What I want you to do today is make a shift. And today's shift is shifting from some of these concepts that aren't in alignment with truth, some of these moral things that have woven its way into our brains and have helped us maybe get to the level that we're at, but we don't understand why we can't get any further. I want to rewire the thought process about why maybe you would want to invest in real estate. And I want you to do it for moral reasons. Okay. I know I'm not picking on you today as the audience. I'm trying to help you make a shift. Because if you want to put the car in second gear and you actually want to have high levels of success and you want to be able to identify these markets, I want you to go into these markets with a good moral foundation. How do we determine if it's a good moral foundation? Is there any deceit? Have you ever left information out on a deal before in order to make the deal happen? You just neglected to tell something on a deal. How about the concept of, okay, maybe you didn't neglect to tell, but maybe you're trying to squeeze every penny out of the other person and leverage their situation so that you can get the property as cheap as you possibly humanly could. I don't know about you, but I don't want to do business with that kind of person. And so my question to you is, are you that kind of person? How about the person who won't fix the issues inside of their property because they're trying to squeeze every ounce of penny, every penny they can, every ounce of value away from others in that situation? See, I want you to begin to look at this concept. Maybe this is a good show where we can do some reflection and just kind of check ourselves. Where are we at? How are we doing? I mean, we want to identify good markets. But if I'm helping you identify good markets, I want you to go into these good markets with me from a place of morality. If I'm working to buy a transaction, I want to look at unity and cooperation much more than I do competition. And so we got to be working and singing from the same hymnal, if you know what I mean. All right. So wickedness is anything to do with deceit, oppression, selfishness, force, leverage. And we're talking about this from the perspective of moral decisions versus wicked decisions. So if you're not telling the truth or you're withholding information in the deal. Now, I'm not talking about being not giving away the farm to somebody else. I'm not saying that you're supposed to go broke trying to help somebody in a real estate transaction. Please hear what I'm actually saying. I'm saying the job is to be truthful and honest in your disclosures. I'm saying the job is to do the right thing when you're working through a negotiation. I'm saying that you don't have to squeeze that tomato so hard that it ruptures all over your white shirt, guys. Pay attention to how I'm talking about this today, because we're going to get into identifying these markets. And if you identify hot markets and you're going into these markets, but you're not building your business on this moral concept, it's going to be real tough because you're building your business across that rickety bridge. Now, the second part of that is the moral part. And I gave you some foundation to the moral. Like, I'm not talking about your core values yet. We'll talk about that in just 1 second. I'm talking about principles that stand the test of time. See, truth stands the test of time. It's something that always was, always is, and always will be. And so you have to be truthful in every endeavor. You have to care about other people in every real estate endeavor and every transaction that you're doing. If you're going to do something that would injure or harm or hurt another human being, isn't it wise or isn't it important to do the right thing and not injure them and not do that deal? Now, if you're doing it for the right reasons to help that other individual and you have their best interest in mind as you're working through a transaction, you might be the type of person I'd want to do business with. And if you're a generous person, if the reason you're doing business is to help a sense of not only fulfillment for yourself, but fulfillment to help others who maybe haven't had the same opportunities you are, or maybe they're working through some of their challenges and they could use some help, and you're a generous person, then I'm all for that person learning how to identify hot markets. But if that's not you, hey, this isn't the right show for you today. There's a reason I led with morality and wickedness, and I want you to understand that what I'm about to teach you today is what the insiders know. See, the information I'm going to walk through with you today, the framework and structure I've put together for you today comes from inner circle people. This come from the top real estate investors that I've come across and met in St. Louis. And so you don't want to miss the information I'm sharing with you today unless you're not of the right morality, unless you're going to use this information to hurt people. Please don't do so. Take the information I'm sharing with you today and build a business around your values. Remember, your values determine your value. And if you build it on wickedness, it's going to erode and crumble. All right, last week, actually 2 weeks ago, I wasn't here last week, but 2 weeks ago, we talked about this concept of mindset, and we have to have a growth mindset. So if we have a morally sound growth mindset, we can begin to build a business around success. And so we understood potential energy. Just as a recap, our brains have this thing called neuroplasticity. So we go to things like Gateway to Freedom or Tours and Pours, different conferences, that builds up our potential energy. Neuroplasticity is our brain's ability to shape and adapt to the different environments that we put ourselves in and to be able to grow and learn in those ways. But then we got this concept of self-talk. And if we don't use positive self-talk, we remember what happens. Yeah, that can derail us and keep us from being able to take action. And so we have to tell ourselves positive self-talks about the things that we're learning and improving and growing around. Then we have to put some effort in. And we really hammered home the thought process of so many people get to the self-talk stage and they just talk themselves out of doing something. So having a positive frame of mind, taking action leads to growth. And then we start this whole concept of potential for success all over again. All right. So we've talked about some morality. We've talked about mindset. Now, how do we take the information that we're having and actually apply it to some different markets? Okay, so there's two things that I need you to be able to understand as indicators about good markets. Okay, there's two different types of indicators for good markets. The first indicator of a good market is going to be visible. And I'm going to share with you 7 different indicators that you can pay attention to that are visible. You can see these things. You can hold on to these things. You can research these things. They're visible. And then I'm going to teach you about market indicators to consider that are invisible. And these market indicators that are invisible are going to help yield the results when combined with the visible market identifiers to yield the success that you're looking for. Some people call these invisible indicators gut feeling, but I'm going to teach you how to work through the ability to discern. I'm going to teach you how to work through the ability to get this gut feeling correct. So these indicators can all be aligned. Because before we can identify a good market, it's important for us to know what are the indicators that would tell us visibly and invisibly whether something's a good market. Would you guys agree? All right, let's look into it. Let's look at the visible indicators that we want to be looking at when we're identifying a good market. Guys, if this is the type of information you've been looking for and what I'm about to share with you resonates, at any point during the show, will you share in the comments for me, even if you're watching on replay, to let me know that this is the type of information that is helpful for you? All right, so let's talk about the visible indicators of a good market. The visible indicators of a good market are surrounded by 7 different items. They're surrounded by 7 different items. And you're going to want to understand and know all of these 7 different items if you're going to yield results in real estate investing. So let's look at all 7 different items through the lens of visible things that we can identify and see with our eyes, we can hear with our ears. Okay? I just have to make the differentiation because we're going to talk about the invisible in just a second. And understanding the invisible indicators are just as important as understanding the visible indicators. All right, I'm glad we're all on the same page here. Let's talk about the visible indicators for a second. All right, the first visible indicator that we have to consider when we're trying to identify a hot market is population growth. Population growth. Population growth, it focuses on areas with significant population increases, signaling a demand for housing and community development. So look for factors like new housing projects, infrastructure, growth in industries that attract people to the area. If you hear about lots of jobs coming to an area, this is going to spark population growth for a specific area. See, people will move from not being able to find a job to finding a job in different areas. And so that's why it's important for us to identify these population growth areas. Which leads me to help you understand the second indicator. So the first one is population growth. The second thing that we're going to look at that's a visible indicator is economic expansion. You want to seek out markets with a strong job growth, particularly in sectors like healthcare, technology, and education. Technology, healthcare, and education. These things help you identify where to go, what to look for, who to have conversations with in an area. Because if you identify healthcare, technology, and education that's growing or booming in a specific market, then these people will tell you where they're moving, where they live. And so if you talk to people in healthcare, talk to people in technology, talk to people in education, you're going to have a good understanding of where they're moving and where they're moving to and from. Okay? So that's 2 different indicators right now. We have population growth, but more specifically within that population growth, see, each one of these is a deeper understanding of the market indicator. They all get deeper around the same thing. Okay, so one yields to the next, which is why when I was talking about population growth, I was also talking about economic expansion. But I'm also talking about housing supply and demand, which is the third economic indicator. Housing supply and demand, you got to analyze the housing inventory and look at the rental trends in the vacancy. A low supply combined with a high demand often indicates a market where property values are likely to appreciate. So I don't mean to go back to economics 101, which a lot of you guys are intelligent. You've already been through. A lot of my audience is college educated. And so you guys understand supply and demand from micro and macroeconomics. When you have a low supply of housing and a high demand for housing, that's going to help you identify that hot market. But we don't stop to think about this stuff. We don't stop to think, is the population growing in a specific area? Is there economic expansion? And is there an undersupply of housing available in that area? I'm going to teach you how to look for these things in just a few minutes in the show. So don't leave me. If you're here and you're watching up until now and you're like, wow, well, that's great, Nathan, but how do I specifically do that? Hang in there. I'm going to show you some hows today. But we got to get these concepts and know what we're even looking at before we can identify these hot markets. All right. So we have population growth, we have economic expansion, and we have housing supply and demand. All of these things yield whether we're moving towards a hot market or not. The next piece that we need to look at is infrastructure development. You got to monitor investments in transportation, utilities, local amenities, because these things are signals of future growth potential. So how do you do that? Again, I'm going to share with you that in just a second. But it's important that you understand that you're looking for places of population growth, economic expansion, low supply of housing, but investments in infrastructure. Once we have investments in infrastructure, we can then dive into the fifth indicator. The fifth indicator is price appreciation and trends. So if housing values aren't going up, is that a good or bad area? What do you guys think? If the housing values are not going up, if rents are not going up, do I invest in that area or not invest in that area? Well, what drives those rents up? What drives those rents up is good infrastructure development. What drives those rents up is low supply of housing. What drives those rents up, what drives the price of the housing up is economic expansion and population growth. Okay, do you see how it all works together? Now, all of that's great that things are coming up. The real challenge, though, is this next concept called affordability index. So that's the next piece that we need to talk about, because you just heard me say housing prices going up. Well, that's great for the investor. Rents going up. That's great for the investor, but can people actually afford to live there? See, if it costs me $1 million to purchase a house in St. Louis, there's very few people that actually are earning the income levels to be able to afford $1 million home in St. Louis. Now, if you tell me that home's $250,000, there's a lot of people in St. Louis who are available with jobs in the market that can afford a $250,000 home. This is your affordability index. Is there a high affordability even though the prices have gone up, even though things are increasing? And I know we're in an inflationary period right now, and it's real hard for us to talk politically about the concept of affordability when we have inflation going on. But there are markets where even though the prices are going up, because the infrastructure is there, the supply is low, but there's economic expansion and the population's growing in the area, there are places where the jobs still, they still are affordable to rent from you with increases in price. Okay. Remember, we're looking for hot markets. So even though nationally there may be inflation, there may be talk of prices going up and difficult for people to afford things, you got to look for places where these affordability indexes tip in the favor of the investor. And then lastly, the seventh thing that you have to pay attention to in your visible market indicators is policy changes. Policy changes. So with policy changes, they help you stay informed about local and legislative changes that can impact your real estate. So you can identify these different policy changes by being involved in the different communities or getting the news from the different communities or looking for zoning adjustments, new housing initiatives, or tax incentives for investors. Guys, policy changes help determine whether it's a good market or a hot market for investors to be in. Now, these are all the visible, tangible things that indicate whether you should invest in a specific market. Now, I'm going to teach you how to do those 7 different things in just 1 second. But there's 2 different indicators that we have to pay attention to. Again, the visible indicator and the invisible indicator. Why is the invisible indicator so important? What do you think? If you're watching on replay, you're watching live right now, go ahead and throw it in the comments. Why do you think the invisible indicator is so important? I'll give you a second to think about that as I tell you a story. So I have a friend, and this friend for a long time had wanted to invest in real estate. Okay. So he's been a friend of mine, close friend. We've talked about things, and he wanted to invest in real estate. He got to the point where he put his money down on a purchase. And when he walked the property, it wasn't anything like the photos. Everything had been photoshopped out. There were problems. The neighborhood looked nothing like the photos. I don't know how they doctored the photos so much that the neighborhood that was run down didn't look the same as it did in the photos. Okay. And then the worst case was when this particular friend of mine asked the real estate agent about it, the real estate agent lied back to my friend about something that was going on at the property. I don't know what was worse, the lying in the photos, or when asked a direct question about it, the agent gave false information. back to the investor. See, the invisible market indicators. See, this agent was willing to list the property in this area. The people who are listing this property were willing to doctor the photos. I don't know that I could consider this a hot market. This is called an invisible market indicator. Okay, let's look at the invisible market indicators for a second. The first invisible market indicator is a positive community atmosphere. I want you guys to look for places with a sense of optimism, active community involvement, cultural improvement. Look for areas that engage their citizens with local projects or fostering local environment for growth. Like, look at, is the schools improving? What is there a positive sense of community in that area? Positivity and energy go a long way, but it takes a lot of energy to jumpstart something. Is there a buzz when you go into the area? Does it feel like a place where you would want to go with your family to sit down and have dinner in the local restaurants or that kind of stuff? Do you feel a sense of, a sense of community with people where they are looking after each other and taking care of each other? Or do you turn on the news and see violent crime after violent crime after violent crime? You tell me the positive atmosphere that you're looking to invest in. See, positive environments, positive community atmosphere is the first invisible indicator. Does it feel good to you? And that's just, don't go 100% on the visible. Don't go 100% on the invisible. Use both of these to make your rational judgment. Okay. So the next invisible indicator, because we got to get through all 5 of these, and then we'll get on to how we do this. The next invisible indicator is renewal and revitalization efforts. You got to seek out neighborhoods experiencing a push towards revitalization, where investment in local businesses, green space, and public spaces reflect a commitment to enhancing the quality of the life of the people that live there. So the second invisible indicator that you need to pay attention to is this concept of renewal and revitalization. If you're looking in the news for different keys and buzzes that could tell you whether something is a good place to invest from an invisible indicator, look for revitalization. Not every place that is going through revitalization has got great visible indicators of real estate for real estate investors to invest in that area. But every place that has both visible and invisible indicators is a good place to park your investment. Now, disclosure. On today's show, as I'm sharing with you these indicators and markets to invest in and not invest in, please understand, I'm not an investment advisor. I'm not a financial advisor. I'm not a CPA. I'm not an attorney. Go talk to the people who are specialists in each one of these areas. I'm sharing with you tools and resources that you can use to have those conversations. All right. The third indicator, invisible indicator that we need to look at is a culture of generosity and service. A culture of generosity and service. I'm not talking about a culture of handouts. I'm talking about a culture of a hand up. You see the difference? I'm not talking about a culture of handouts. I'm talking about a culture of hand ups. It's a good invisible indicator of whether that's a good place to invest in or not, at least from an invisible indicator. See, a culture of generosity and service, this is a market where local organizations, charities, and residents, they're exhibiting a strong commitment to serving others. It's a culture of giving and community involvement, and it can indicate a foundation of stability and collective well-being. What are the nonprofits in the area doing? What are the spiritual organizations in the community doing? Are they involved? Or is everybody kind of just laid back, passive, no activity happening, nothing improving? Pay attention to the generosity inside the local community. The fourth invisible indicator that we have to pay attention to is an alignment with truth. Are the people in the community in alignment with truth? Are they telling the truth? Focus on areas where the pursuit of the truth and transparency is evident, not just in each individual interaction. but in governance, in community initiatives, and local business practices. Pay attention to how people are interacting in the community. Are they telling the truth? Or do you have people in the community that are taking advantage of each other, that are lying to each other, deceiving each other? Are they making up false photos like the story that I told you earlier? See, when you invest in a community, you're investing in the visible indicators and the invisible indicators. Just because you see population growth, just because you see, economic boom, just because you see the technology sector, the healthcare sector strong, just because you see policy changes, infrastructure development, just because you see those things doesn't mean that these invisible factors are working properly. And so we got to have these invisible factors in our favor. We got to have a positive community atmosphere. We've got to have renewal and revitalization efforts going on. We've got to have a culture of generosity and service towards others, and we've got to have a culture of alignment with the truth. Now, lastly, this last one is kind of a unique indicator, because this last invisible indicator is going to tell you whether the place that you're investing in cares about everyone or only some people. Does the community you're investing in focus on unity? Are there areas that they're prioritizing in their community for unification of everyone and embracing different diverse opinions that foster a more resilient atmosphere for the community, which can support a stable real estate market? Are we focused on unity, bringing people together, working together towards common cause? See, if we do all 5 of these invisible things and we layer them in with the visible indicators, we pay attention to these 5 invisible indicators and we pay attention to the 7 visible indicators, then we might have a hot market that's brewing. And so what I want you to do is to overlay the market data with the community indicators. Combine traditional demographic and economic data with this invisible atmosphere and culture so that you can decipher, are the signs positive? Are we thriving? Are we seeing strong market trends? And are the people in the community a community I want to invest in? Engage with local networks and leaders in those communities. Go to the local meetup groups. Go to the different organizations in the community. Get involved in the communities where you're investing so you can engage with a variety of different voices that will help you kind of filter out whether that's someplace you want to be or not. I understand maybe the hot market's not in St. Louis. Maybe it's in Arkansas. And so you got to go to Arkansas, but you got to be there in the community to know what's going on. And then lastly, the last kind of combining way you combine these things is you evaluate the alignment with your core values. Remember, your values determine your value. And if you're going to build value everywhere you go, value being equity, if your core values are not in alignment with where you're investing, then is it a good spot to be investing in? See, for me, areas where there's a visible market indicators that align with generosity, loving others, and the truth help me to determine whether that's an area I want to be in or an area I don't want to be in, specifically from a management standpoint. And so from an investor standpoint, don't you want to look at places that are in alignment with truth, that are loving of other people, and that are generous places? Just a thought process. Now, we're going to take some practical steps to finding hot markets. I told you that I would share with you what to do. Now, this is the how to do section. The real challenge is we're 34 minutes in, guys, and most of these episodes run 45 to 50 minutes long. On today's episode, I'm going to have to compact the back half of this show on how to do some of this stuff. But if you need more of this type of information and you'd like to have a one-on-one conversation, just reach out to me. And you don't have to completely deal with every aspect of this show. I can share with you this on a one-on-one basis. Okay. So I got to cram a bunch of information in to the back half of this show in order to be most effective for you, the viewer, as we're watching this stuff. But don't let that derail you from learning this information. If you need more help, just come see me. Okay. So the first step first practical step that we're going to take in identifying these hot markets. So how do we take the visible and the invisible? What do we specifically need to do in order to make that happen? The first step that you got to do is use comprehensive data tools. Okay, so how do you get this information? Number one, if you have access to the MLS, this will give you some good information about the appreciation values of property. Okay, so if you're a realtor or you have access to a realtor that can get you data to the MLS, you can look at appreciation values. Take a good sample size of the local municipality that you're looking to invest in if you're thinking about St. Louis, and see if the properties are appreciating and at what rate they're appreciating. Because some places in St. Louis, you get an appreciation value of around 7% per year. Some get 23% per year. It's just unique, and it's specific to each individual market. In just a second, I'm going to share with you specifically St. Louis and some things to pay attention to. What's happening in St. Louis kind of is market trends that are going on, so you're not going to want to miss that. However, first step in identifying these hot markets is use comprehensive data tools. First data tool being MLS. Second data tool that you can use are things like Zillow, Redfin, or local market reports that will help you gather on these different trends and property values. So get the property values down. Use things like Rentometer to check the rental rates. Are they going up or down in a specific area? I recommend paying for the subscription to Rentometer. Not every investor is going to do it, but if you get the data, you're step one in the right process to identifying visible and invisible indicators. All right, number two, attend community events and forums. If you want to start to get this feel for the invisible, so the first step is to gather data. Second step is to gather the invisible things so you can discern a community. Attend events in the community. Don't attend events just with real estate investors. Attend events that are in the community that you're looking to invest in. What is the sentiment of the people there? How do they perceive? What are they doing? Go to the Chamber of Commerce in the local areas. Go to B&I groups. Go to meetups in the area. Figure out the sentiment, the invisible factors that we were talking about, and ask questions. Right. The third step in how to do this is observe local engagement and development. Take time to walk or drive through the neighborhoods and note signs of active revitalization, new construction, community projects, or evidence of local efforts to improve the quality of life of the citizens. Literally take notes on this. If you're considering investing in an area, drive the area. And then lastly, step 4 is prioritize transparency and ethical practices. So when assessing a potential market, consider the level of transparency in the local governance and the ethical standards of the key stakeholders in which you're going to be investing. Markets where truthfulness and integrity are prioritized are often more reliable than long-term investments. They're often more reliable for long-term investments. So prioritize truthfulness and integrity because these are going to be more reliable areas for long-term investments. So the framework is get data, attend community events, drive the neighborhood, and then pay attention, look at the news from the local area and determine, are they being truthful with integrity? And if you can do those 4 things, that will give you all of the resources you need in order to be able to do how I talked about on identifying these areas. Do the research. There's different websites that are available out there that are government-backed websites that will tell you about jobs. Go to the local utility companies and look on the utility companies' websites for investments in infrastructure. Go to the Parks and Rec divisions in the local municipalities and look for the investments that they're making in the community. You can look for things called request for proposals, RFPs, on these municipal websites and see, are they looking to make investments in their community? Or can you not find any of this information? If you can't find the information on the local municipality's website, it might be a challenge to invest in that area because they may or may not be being truthful. Just a thought. You guys see how this works together? The visible and the invisible, the tangible and the intangible reflection for a hot market. You identify these key areas. Now you know how to invest in a specific hot market. How many of you guys now that are watching online, though, would love to know what areas in St. Louis have got hot markets? We're going to talk about that in just a second. But before I can talk about that, I would be remiss if I didn't thank my second sponsor, BBC Global Services. I love working with BBC Global Services because not only do they provide me the resource that I need, so they provide me a virtual assistant to be able to do the work within our business. They also have a manager that oversees the campaign. They provide daily reports, so I know what that person worked on the previous day. I love BBC also because the organization covers all of the benefits, the salary, all that kind of stuff. It's like hiring a full-time employee without having to pay for any of the overhead with that employee. They just have a flat hourly rate, which is great about them. You only pay for the hours that the particular virtual assistant works, and they work directly with you. So they log into my systems, they use my stuff, we communicate back and forth via camera. We love BBC Global Services here at Red Maples, and I hope you do too. This is outsourcing that helps people like you focus on your superpowers, simple and on your terms with no term limits and no minimums. Get a free consultation by heading over to bbcglobalservices.com. All right. So we talked about identifying these markets. We talked about what to do to identify them. We talked about how to identify these different markets. So what are the different potential markets that you can invest in? Sometimes I do a full presentation. I'm just going to do a reminder on the different types of investments. You got to remember, in St. Louis, there's different markets like there is in the streaming services. So in the streaming services, we have these three different markets are on the screen. We have Hulu, Netflix, and then Disney Plus. So those are the three markets that are on the screen. Okay, Hulu, Netflix, and Disney Plus. Those are like different municipalities that can be invested in St. Louis. Okay, so there's the different municipalities, and having all of your properties in one municipality, there's old school management kind of efficiency thought process where you want all of your houses on the same street. However, it's not very diversified if you're investing all of your houses in Netflix. Does that make sense? If Netflix goes out of business, the market turns, you're in deep trouble. Okay, so you have these different markets within St. Louis. These are the different municipalities. These are like different streaming services. Then you have different types of real estate investments that you can do within each market. However, like an action movie might be like flipping houses, or a documentary might be like a long-term rental, or you might have a romantic comedy like a short-term rental, or you might have a drama like commercial real estate. Do you guys understand the complexities? You can invest different types of investments in different kinds of markets. And so by diversifying yourself, you really put yourself in a position to really grow your real estate investment with good diversification and good diversification strategies. Okay, so now that you understand that there's these different markets that you can invest in different ways to invest within those markets, different types of markets, then let me share with you this next concept that's extremely important. And this is specific to St. Louis. I want to use St. Louis as a case study to help you begin to understand how you look at these invisible and visible indicators. Okay, so the median sales price in St. Louis has risen to $304,000, making a 6.7 increase from the previous year. Okay, the market has historically shown stable appreciation around 7.2% annual growth over the past 5 years. And these trends are a steady market. They point to a suitable market for long-term investment because it's consistent. It kind of does the same thing year after year after year. So that tells me the home prices and appreciation and whether it's a hot market for what type of investment to make. Long-term investments because of the stable growth or appreciation of the property values. That's why people love St. Louis for long-term rentals. All right. The second is inventory levels that we're looking at for hot markets. And as you look into St. Louis, the residential home inventory remains low, which is driving up prices and sustaining demand. While the market is still a seller's market, the inventory of townhomes and condos has seen a significant increase, potentially offering more opportunities for buyers in those segments. Okay, so we looked at the pricing appreciation over time. It's been consistent. Condos, townhomes, small multifamily even, is starting to become a little bit more of a buyer's market. Now, rental market strength. With high demand for rental properties in St. Louis, it's considered a strong market for passive income through real estate investment. The city's affordability compared to the national average also attracts investors for high returns on rental properties. So, because the property values are low enough, and in some areas, the economics make sense in the affordability index for the tenants, now we're starting to see why investors are attracted to some of the St. Louis market. And again, we're using this as a case study, right? Do this in your own local markets. Do your own research. Now, I'm not telling you to invest in these next couple of areas that you're about to see on the screen or hear me talk about, okay? I'm not telling you that these are the places you should invest and you're going to make money and you're going to get rich. I'm going to tell you based upon my research, visible and invisible research, when and if I make a future investment, these are areas that I'm seriously considering within St. Louis. I'm also considering areas outside of St. Louis whenever I make my investment in real estate, next investment in real estate. Okay, guys? So please don't use this as your decision-making process. Use this to see how I concluded these decision-making processes. Okay, so there's areas in St. Louis that seem to me to portray some of the indicators, the visible and the invisible indicators. I'm not saying that these are 100%. I'm not saying that these are golden. I'm not even saying if you'd invest in these areas, you'd make money. I'm saying that these are areas I'm considering and I'm looking at because of the indicators of the things we just talked about. First one being Central West End, Forest Park, Southeast, and Botanical Heights. Here's why. Here's why. These neighborhoods are recognized for the high medium income values and growth potential. They feature a mix of historic charm, but some cultural attractions, and there's ongoing development that's happening in these areas. It makes them attractive for both residential and rental investments in these areas. These are kind of up and coming areas in St. Louis. Now, if you're looking for a little bit higher returns because the property values in those areas are also high, in St. Louis specifically, some areas that I'm looking at that when you run numbers and run data on all this stuff that has made sense to me, not every single purchase is the right deal, guys. Do your research, do the right thing. I'm not telling you where to invest or that you're going to make money. I'm telling you how I look at this. And if you're an investor in St. Louis, you'll understand some of this stuff. All right. If you've been here, if you're doing the research, you're going to the meetup groups, you're a part of the things, you'll understand these things. University City and Hazelwood. They're suburbs with strong rental demand and relatively low price points to purchase. These offer good opportunities for value add strategies in your rental property. Now, it depends where at in University City and Hazelwood that you're investing, where you decide to make your investment. All these choices are up to you, obviously, as a real estate investor. I never tell you where to buy. I'm never steering you on which way to go. You're welcome to invest in St. Charles County, all the way out through Lincoln County, all the way north, all the way south, east, or west. Invest in any area that you do the research for. I'm just telling you that I've done some of my own research, and these are different areas that we're considering. I might not even buy in these areas. But I'm helping you with the case study for St. Louis, so you can see specifics, right? Nobody ever gives specifics because they're always afraid that you're going to act on what I just said, go out and purchase something without doing your own research, and then you're going to come back and blame me. I'm telling you, don't do that. Do your own research. On the flip side of all of that, when you do your research, maybe you identify some of the same things that I'm kind of coming across or identifying in these things. Let me know. If you happen to identify some of these same things, let me know in the comments, send me an email, reach back out to me. Let me know if these are some of the same areas that you're considering investing in and why. All right. Now, there's two types of real estate investments that are good within those communities that I'm identifying. It doesn't mean that this is what you need to do. This is for me, okay? This is Nathan and maybe part of my plan. Look, multifamily and townhomes. Multifamily and townhomes. Specifically small multifamily. There's an increase in inventory for condos, townhomes, and some multifamily within St. Louis. Okay, so I'm looking at those. I think you can negotiate on a little bit of the pricing. Of course, if you're negotiating with me, you know that I'm not going to hard negotiate you. I'm going to look for the things that make the most sense that wouldn't hurt the people that are involved in the transaction that I'm doing. Okay. And secondly, I'm going to look at flipping opportunities in these areas. So long-term rentals with multifamily and townhomes and flipping opportunities. Look, I'm not talking about single family. I'm not talking about commercial. I'm not talking about all these different things that are different opportunities out there. Do your own research, see if it works for you. These might even be wrong for you, but this is what I'm considering, right? Because St. Louis is a robust rental market with high demand and young professionals. And there's some areas that have student population if you get into the right neighborhoods because they're close to universities. And these can foster long-term tenants that pay their rent, do the right thing. They're in good, visible and invisible areas. And if you're considering flipping, because of the appreciation rates, and you can measure this by neighborhood, you might even look at 5-year flip potentials where you're buying in short-term holding and then flipping after 4 or 5 years, right? Depending on the cash flow and the appreciation you can get of the property. Do your research, do the math, sit down with your financial advisor, talk to your CPA, see if these things are right for you. One of the other resources that you'll need is an insurance agent. And if you need an insurance agent that will proactively shop your insurance to ensure you're with the most affordable policies with the most appropriate coverages, Web Insurance is that company. They broker insurance. And what I love about an insurance broker is they're not beholden to one specific carrier. They have multiple carriers. And so when markets shift or things change, Web Insurance can change with you, and they can review your current coverages to make sure that you have the most correct policy with the most affordable prices. From 1099 contractors to 1099 insurance agents, if you receive your income via 1099, let Web Insurance be your guide. Head over to www.webinsurance.com and they can get you a quote to see if there's room for it to be even more competitive. So you got to assess all the risks, right? And that's what Web Insurance will help you do from an insurance standpoint. Oh, guys, we have been talking a lot today about investment markets, how to look for different investment markets. Please use all of my information today as entertainment and education on how to do all this on your own. Do not take the information I gave you today and run out and try to do exactly what I just shared with you. It may or may not work for you. Okay? This is just how you do it. This is what to do and how to do. But then when you put the effort in here, you got to put the full effort. You got to put the whole understanding of the things that you just learned into practice and take your own risks, take your own opportunities for growth. Because like I said in my presentation at Gateway to Freedom just yesterday, the higher the risk, the higher the, you're going to say reward. I say the higher the risk, the higher the likelihood of failure, right? You've got to understand that we've been programmed a certain way and we all make these weird decisions. And so we got to base ourselves on these moral values that we have, not base our investments on wickedness. We got to base it on morality. We got to follow the growth plan that I laid out for you with the right mindset. Doing those things, then there's 2 different types of market indicators we're looking at, visible and invisible market indicators. There's 7 visible market indicators and 5 invisible market indicators. Those things work together to help you identify the types of markets. I gave you a case study of St. Louis about different areas that I'm considering investing in. I potentially could, might not, might invest in. Just depends. I haven't made a complete decision on where I'm going yet with my next investment opportunity. But for you, I gave you a case study on how I looked at some of that stuff. And then I've done research in those specific areas. So go do research in those areas, see if it makes sense for you as well. And then lastly, it's so critical that we understand that there are 3 types of investment markets. Those 3 types of investment markets are growth markets, cash flow markets, and balanced markets. I consider certain areas of St. Louis to be a growth market. Something like Midtown might be a growth market and provide investors looking for high appreciation just right now. Now, cash flow markets might be something like Hazelwood, Maryland Heights. These are places where properties might be lower in price, but they'll yield higher more suitable long-term returns and cash flow for investors. And then you have balanced markets, places like Central West End that provide a mix of appreciation and rental income. And so for me personally, that's what I've been looking at. Those are things that I've identified, those 3 different markets, types of investments I could potentially make in those markets, the visible and invisible factors that I've been looking at in those markets. Do your own research. I've said it 1,000 times on this show. I'm going to continue to say it 1,000 times because I'm not making guarantees of any type of good investment. I'm showing you the thought process it takes in order to be able to make an investment and how to actually do this. The things you need to actually be looking at in order to do this on your own. Nobody shared this with me when I first started learning. I had to go through years and years and years of research and work and conversations with other great investors and being part of the local real estate community for so long. These are things that I've just been able to identify in St. Louis by being part of the movement that we have here, this ethical, moral movement that we're talking about within St. Louis. All right. And if you guys would like to learn how to achieve rapid strategic growth within your business, there's a couple of different options. If you're a real estate investor, you can head over to Amazon and get my book, The Caesar Method. That will give you some insight into the framework on how to achieve rapid strategic growth, whether you're working on lead generation or lead conversion, whether you're working on processes or you're working on personal development. This is the framework that you can layer over those 4 different areas of your business in order to achieve or yield rapid strategic growth in any one of those areas. However, if you'd like to meet one-on-one with me and see how we can get your business to rapidly grow, schedule an appointment with me. Check out the links in the show description, and I'd be happy to help you out. Schedule a one-on-one appointment, and we'll have that conversation. And Red Maples, the sponsor of this show, Red Maples, we show small multifamily real estate investors how they can earn double-digit returns with institutional-style property manager. That's Red Maples. We do a complete portfolio assessment for you to see if what you currently have right now is the right profitable thing for us to manage for you. We put together entire portfolio. We look at a budget. We look at investment ratios if you have enough property, and we can give you some feedback on whether these are all good investments for you, whether we think that we should make changes in some of that investments, whether you should refinance your investments. All of that to be said to help you understand what property management would look like on that investment portfolio. If you're looking for that type of assessment, head over to red-maples.com/assessment, and I will get you a complete rental portfolio assessment that will this assessment, guys, I've met with literally hundreds of investors, and those investors taking the time to meet with me, their businesses, whether we manage for them or not, a lot of times they end up growing afterwards just because of the one-on-one conversation. I encourage you to do it. Head over to red-maples.com/assessment and see if our real estate investment assessment is right for you. All right, guys, that was a complete show. I told you 60 minutes is where, 45 to 50 minutes where we typically go. This one's ran just about 60 minutes. And that, Renovation Nation, that's going to bring us to the end of another episode. I'm Nathan Bush, your guide on this journey of real estate business growth. Remember, just like plants need the right air, soil, and care, our minds need the right environment to build a life of purpose, passion, and growth. And don't forget to get your citizenship to Mind Renovation Nation. Subscribe to my email list. Hit subscribe on YouTube. And if you love today's Mind workout, share this show with a friend so they can join us every Friday at noon. And join me next time for more insights, inspiration, of course, a little bit of that nation-building spirit that drives us to create a community united by shared values, purpose, and a commitment to leaving a lasting legacy. Until then, keep building, keep growing, and let's lead more than 25,000 souls to a life of values-based investing. In our journey of Mind Renovation Nation, we often talk about a couple of things. Number 1, personal growth. Number 2, ethical leadership. And number 3, making impactful choices. Values-based investing is an extension of that philosophy. It's about being a steward not only of our finances, but of our values and vision for the future. So I'm going to sign off from the heart of St. Louis, but stay blessed, stay inspired, and remember, every day is a chance to renovate your nation.